tweezer tops and tweezer bottoms. It's not actually my strategy. It is just a candlestick formation pattern, like a doji or a kangaroo tail or whatever. It's something that people do tend to trade. If after this video you're still kind of confused or you want to know more, I will link somebody, I can't remember his name right now off the top of my head, but he does do a YouTube video where he does trade primarily indices also with the tweezer tops and bottoms, because it does work very well with them, but it does work with any pair. And I will show you multiple pairs on here. I will show you a Bitcoin example, a couple of the basic pairs I'll run through, and I think I did gold for you guys as well, and the indices obviously. So it does work any time frame. It does work on as well. Tweezer tops and bottoms will print on 1 minute, and they will print on a daily or monthly, whatever. Obviously, be smart about your risk to reward and what you're going for when you're trading a 1 minute versus like a 1 hour or a 4 hour tweezer top or bottom. So with that being said, there are some rules that kind of go into this. Tweezer top bottom, though, is not my actual strategy, but these are things that I do add in with it in order to make it a little bit more accurate and avoid so many fake outs. You do need to understand when you are trading them, you are usually going against the trend. You are almost looking for like that reversal or that retracement. So it can be a little bit risky, but you do tend to keep a decent stop loss, and it's easier to kind of mark up zones. So I will show you all that in an example. The main idea is that you do need to usually look for a significant move away from your moving averages. That kind of helps to signify that there is some type of retracement coming. It's not always necessary on every pair, and I will show you, but if you see a significant move away from them, do know that you probably are looking at a decent enough reversal, and it does make it easier to mark up your zones for your take profits. As far as what you're actually looking for is the wicks. You're going to be looking for the wicks of the candles to be somewhere between 90 to 100% the same length, and they need to be at a key level of support and resistance. When I say 90 to 100, I will show you, but what I really mean is 100, you guys. Like, some people say 90, but I know some of you will push the limits. And you'll be like, oh, it's like roughly 90, and it'll really be like 50. And then I'm going to be like, that's not even close to the same length wick. Why did you send me this markup? So do not do that. When I say 100, like for practicing purposes and marking it up, stick to 100% the length for now. And then as you get a hang of it, you can kind of like push the limits a little bit more with like the 90 to 95% of the length. The actual size of the candle does not matter, just the wicks. Ideally, you would have an engulfing candle that confirms your entry candle, but also not required, but I will show you how you can do it either way. You do need to have one of each candle, and what I mean by that is you need to have a bullish and a bearish, or a bearish and then a bullish, and it needs to be, that entry candle needs to be in the direction that you want to actually enter the market in. And then you will be entering at the close of that candle. Stop loss will go above the top or the bottom of your wicks, just slightly above or below. Please do factor in whatever spreads you might have to cover. So if you have a 2 pip spread, make sure you're placing it 2 pips above that top of the wick or top of the bottom. A lot of the times the market will come back and try to retest sometimes, and you can get stopped out even though it didn't actually hit it because of your spreads. Stochastic RSI is something that I love, so I do look for that crossover in the direction of the trade that you are looking for, or for it to be overbought or undersold, and I will show you how that works. You want to aim for about 20 points if you're on indices, and then move your stop loss to slightly in profit, and you want to be looking at either closing your trade, or if you stacked your trades, you would close out one and then move the others to break even, and then mark up your zones. Although I told you you can do this on multiple time frames, ideally you're going against the trend, like I said, so you still are scalping to a certain extent, even if it is on a longer time frame. You're not with the trend majority of the time, so you need to be cautious of that. So don't be crazy. If you have 5-10 pips in profit, make sure you're at least taking them off of the table, taking partials or whatever. On the higher time frames, you might be able to go for 20 pips or so, but just do your own research on whichever pair you're doing. Every pair moves different. If you have to bust out the ATR and figure out your average movement for it based on those candles that you're entering on the wicks, the tops or the bottoms, you can definitely do that too. Okay, so what you're looking for here, as far as just spotting them, I would say you're going to be just looking in the market. So you'll probably be busy doing your own whatever you're looking at, and then you'll just happen to notice like something will print, and you're like, oh, that's interesting. This is why you don't really need a whole setup or a whole template for just trading tweezer tops and bottoms, unless you really love them and that's like your thing. But as far as I go, like I don't have that, and this is why I'm saying you don't really need it. I just happen to have a 50, 21, and 200 on almost all of my templates. So this is the template that I marked up for you guys. You just want to know, are you above a 200? And you want to know moving averages in general, just like a 50 and a 21 when you put them on, just to get an idea of where are you in those, in reference to those moving averages. Because like I said, ideally you would like to have a pretty good push away from your moving averages, whether it's up or whether it was down. You kind of want to be away from them to get a good entry versus being something like this in consolidation. I mean, you could still manage to get some, pips or points out of it, but it's not ideal. Obviously, the further you are away from these moving averages, you always have to come back to them. So the best thing is to look for the retracement or reversal of these. So you do not need to put all of these on, but for those of you, I know you will ask, what are they? So this is the 200, the average, and the 21s. And then the stochastic RSI is 3, 3, 14, 14, which is just standard when you're putting it on. Okay, so as far as this actually goes, the strategy, what I want to show you is that what you're looking for here is you have these candles that print here. So you see you have a big push up in the market here. Momentum kind of, it's been pushing, but you can clearly see after these two crazy bullish candles that you do kind of get a little bit of slowness in the momentum. So what I'm looking for is these two candles. So what you have here is you have a nice bullish candle and then you get a bearish candle that prints. And if you're looking at their actual wicks, which is very tiny to see, but you can see here, they are like identical. So this is where you would enter at. So what you're looking for is for this candle prints, and close. You enter at the close of candle. Do not enter while it's still forming, because a wick may end up forming and go way up and you're completely destroyed. So you want to wait until candle closes. You will be entering at the close of that candle. So as you can see here, this is your entry right under it, and then right above those two wicks would be your stop loss. Super tiny stop loss. So this is why I do tend to like this strategy. Sometimes you can find these really nice, very, very tight stop losses, especially in the indices. A lot of you know that they can be so volatile and that sometimes the stop losses can be ridiculous. So when you see something like this, it's really nice to have such a tiny stop loss, because there's barely any drawdown that you would have to deal with, or even if you take the loss, you barely are getting hit with that. So you put your stop loss up here, you're entering here, and the reason we also like this as far as an entry is because the stochastic is showing that it is overbought. So I do know that it has to come back down. I am not saying that this is the correct way to use the stochastic at all. Overbought and oversold. I know a lot of you will be like, that's not how you're supposed to use it. I know. We are going against trend here. I'm very well aware of it. We are scalping the retracement here, and we are not like looking for a full-on trend reversal, which you can see we don't get a full-on trend reversal. So that's the point. We're just looking for the retracement to scalp it off of this movement. So you get your little tweezer tops here that you have, because the wicks are 100% the same length. Two of the opposite candles, so you have your bullish candle and then you have your bearish. You put your stop loss just above them. As you can see, you don't hit your stop loss. So your entry is here, and then as you can see, you're overbought on the RSI, and you have the crossover that does come. And then what I would say always is 20 points is what you're looking for. 20 points on the indices is really nice. It's definitely worth taking your money and of some sort. So I'd say if you're taking one trade and that's all you want and you just want to scalp it, take your one trade with your 20 points and close it for the day. If you are looking to hold it and you say, oh, I don't know, I really love the way this is going, and you see this cross on your stochastic and you think it might have to retrace even more, that's fine. you can take partial of your trade. So make sure you're taking at least 50% at your take profit 1, and then at take profit 2, you would take 25%, take profit 3, you would take 12%, and then take profit 4 would be the remaining 12, 13%, and you could let that run. After take profit 1 is hit, you are going to move your stop loss just below entry, so you are at a safe trade. As you can see, you would have been just by like the skin of your teeth good to hold for the rest of them. I think that's pretty much it on this one. So yeah, after take profit 4, I mean, you hit all your take profits here. I had done this actual trade, so this is an old markup, and I ended up hitting all 4 of my take profits. So basically that's how you guys would do this. The idea though is you're just looking for these tops and bottoms to be 100% the wicks, and because this is a top, you're looking for sells because you have such a big push up. You're looking for the retracement of this push. So you are looking only for tweezer tops right now. So you got your tweezer tops, and then you just look to get that retracement. Another tweezer pair here that you would see, and I wanted to mark up a couple of them to show you how this works. So this is actually one that would be a loss, and I'm going to show you why you wouldn't like to take that one. This is why I like moving averages. When you put on your 21 and your 50, you can see you're sitting right here on your 21 area. This is not something that I'm really that interested in. You're still in your zone here. You never moved out of it. There's really nothing here exciting in this area for me to say, oh yeah, let me get into that trade. Now, had this candle, this bearish candle, come down out of this zone, this area, these candles here, and had it busted through that 21, maybe dipped through the 50 and broke that area of support and resistance that you can see forming here, then I would have said, okay, that's probably a trade I would have taken. I know some of you probably still will take this because, like I said, you may not use the moving averages. You might think it's too cluttered on your charts, and that's totally fine. But just know that you will have more fake outs because of that. In this case, it does meet all the criteria. You do have 100% same wick. You have 2 of the different candles, and your stochastic is crossing down for you to go down. It's absolutely a valid trade to take. But just know that this is not something I would have personally taken, because when you're looking at your areas that you're in, this is not an area that I at all see something worth trading in. This is just consolidation, and until you're broken out of that consolidation, it's not really worth a good trade. Let's move on. I'm going to show you guys NAS. The biggest thing, like I said, is I just want you guys to get used to finding them, just spotting your tops and bottoms. So NAS, I'll show you on a 1 hour just to show you different time frames and pairs. So you can see you have a tweezer bottom here. It's super small, but as you can see, those wicks are 100% the same length of each other. You have one of each candle. This is a really nice one because this is actually an engulfing candle, so this would be something I'd be very interested in if I saw a print. And as you can see, your stochastic does support that. So you would enter here at this point here. Stop loss would be down here, and you would mark your zones up however you wanted to. You know, take your 20 points first if you're doing it on the indices. Secure those, and then, you know, mark your zones up. Obviously, this looks like one here. Over here would be zone 1. So we'd have like, I'd make like take profit 1 here, take profit 2 above that area, take profit 3 above this guy, take profit 4 above here, and then you could let it run if you wanted to. And that's how you would do that. So that's a winner. This one, same thing here. You have, these ones are about 90% of each other, but still pretty good. You have your candles in the one of each direction that you need. You are looking, you're far away from your moving averages, and you are looking to get a quick little retracement on that move. This one, you can see your stochastic does come up pretty high, so you know that you had a pretty strong movement there, and you're getting into the overbought area. And you can see you do get a little push down for the next hour, 32 points, so you win on that one. You're just looking for 20. You just want to secure your 20. After 20, you've moved your stop loss to break even or slightly above it, so you cannot lose. You either took 50% on your 20 points, or you moved your stop loss. So you should be winning no matter what. Here you can see another one that we have. Your wicks are about just about the perfect same length, one of each candle, and then you do drop down. That's more than 20 points, and you are a pretty decent way away from your moving averages. Also, your stochastic is in the overbought area. So you would have this one here as a win. You have your bottoms down here, and I actually did take this trade too. So this one I didn't take because I was actually already in this one, but I did take a tweezer bottom on this one, and then so you can see here your stochastic is undersold, and you have actually a little bit of a cross. This is a pretty crazy candle to have to put a stop loss on, but if you're careful with your lot size, just know when you're entering here that you're going to have to go a little bit smaller on your lot size because you got to cover a pretty significant stop loss. But you can see you do end up being able to mark this one up for a couple of take profits as well. I'm not going to keep going through each one, but you do have this one would give you your 20 points. That's a win. This one here, another win. You get your 20 points out of that. This one here is a win. You're under, so you're looking for the buy, you get your 20 points. Here you're getting higher, so you get a win. Here you can see win. Here another set of them, win. So those were the indices, SPX and the German 30. They all kind of work. I'm going to show you Bitcoin. Bitcoin is definitely a little different. Don't worry so much about the stochastic when you're doing it. If you're doing it with like a Bitcoin or Ethereum, you're just looking for the tweezer tops and bottoms. On the 1 hour, I do like 1 hour better for the cryptocurrencies just because they're kind of volatile. They do like to make these crazy wicks. So the 1 hour does tend to be a little bit easier. And I also like the moving averages better with these because you can see that they form pretty strong support and resistance zones, and they like to like bounce off of them. That's my other thing when it comes to trading the Bitcoin. You really don't need to worry about your stochastic so much. So as you can see here, you have a nice set of them on the hourly time frame. You have your bullish, and then you have your bearish. It's engulfing, which is perfect. You do for the next hour or two get a nice little push down. So that is a win. Here you have it again. You have tweezer tops, and you're just looking for a quick scalp on it. On an hour, you do end up coming down. I am not a big trader of crypto, so I don't know if this is a decent amount for you guys or not, but it looks like okay. That's I was marking my charts up. This is like where I would put it for my take profit one. Some of you might know better than me. Like I said, I don't trade it. I just hold cryptocurrencies. I don't trade them on here, but let me know if this is like a ridiculous amount to want to only take, because I really don't trade it like that. But I mean, to me, that looks like profit, I'm assuming. Based on my spreads too, from my broker, my spreads are pretty tight with cryptocurrency. So, I mean, that definitely would have been profit for me, but I don't know about you guys. Maybe not on the weekends, but any other time. It seems to look pretty tight. So I don't think that would have been a losing trade. Here you have it again. And like I said, though, when you're doing cryptocurrencies, they love to sit on their moving averages. So you're sitting on the 21. This is one where I would say that you don't want to be away from the moving average. If you're on a moving average and you got a nice little area like this, take your tweezer tops and bottoms, because you will, majority of the time, end up like pushing off of that. It's just the price trying to consolidate, and then it'll give you another push up. So if you're finding tweezer top or tweezer bottoms on a moving average, I would probably look to buy for them, because likely the price is consolidating, and once it gets enough momentum at some point to push up, it will. So here you can see you do win on this one, it goes up. Here, this one's a little kind of hard to see. Technically, there's no wick on this one, but you are within the 90% rule. If you had gotten in on this one first and held it, you wouldn't have gotten back in it here, or you could have taken a second position here, but either way, you wouldn't have been stopped out. You would have either been in this one first and held it, or you would have been here and then gotten in. This one here, I do, like I said, I'm not a crypto trader, but I do believe that looks like a decent little push down. You are on the hourly, so if you enter on here and you come down to this point, you know, that's a pretty nice little push. Here, again, you have tweezer bottoms. If you're entering in here, you would never get stopped out, and you get up to there at some point. This would be a loss. You would have your tweezer top here. You have the tiniest little wick here and nothing here, but you would have been stopped out most likely here, depending on your spread and stuff like that. If you did put it a little bit higher up I mean, good for you if you're more cautious. This is such a tight stop loss, like a crazy tiny stop loss. So, I mean, if you wanted to be a little more generous with your stop loss, you know, and thinking like, hey, here's a zone or something, obviously then that would have been a win for you. But if you were following along and just putting it slightly above your wicks there, I mean, you probably would have gotten stopped out. So I count it as a loss. This one's a win. You can see you have your two tweezer bottoms, goes up. Tweezer bottoms again, goes up. Tweezer tops kind of comes down a little bit here the next couple of hours. Tweezer bottoms goes up. So that's Bitcoin. I'm going to keep moving along here, just kind of showing you wins, losses. Now we're back into the basic pairs. So I do tell you to probably worry about your stochastic. Cryptocurrency, not so much because it kind of does its own thing. But with the basic pairs, I do like it with the stochastic. So you have your tweezer tops, and as you can see, you are in the overbought. You have a nice, beautiful cross. You would enter here at the bottom of the candle. Stop loss is up here, and it falls. So you do get some pips there. In that case, you could have gotten 20 if you had like carefully just, you know, taken partials and stuff along the way. Here you have another one, tweezer tops, and you have a cross on your stochastic, and you have a bit of a drop. That looks like at least 5 pips. 11. I mean, you could have gotten 10 there easily. I mean, it comes down to this little point at the lowest, but you definitely got your 10. Here, let me see, I'm just making sure I didn't miss any. Here we have another one. You have another set of tweezer tops, and you are kind of coming up to a moving average, so this is somewhere where I'd be looking for a strong rejection. So when you see a tweezer top and you have a nice rejection again, then you would get in, and yeah, you get a beast of a candle there, so that's a nice one to get in on. This one is on the stochastic, it's in the middle, so I know some of you are like, oh, but I wouldn't take it. You have to remember you have it in this area, it's your 50. So if you're somewhere in the 50 and you are in a downtrend, that is okay. This is why I say it's advanced. There's multiple things you have to remember and take into consideration. So yes, you're right, you're not overbought, you're not oversold. But like I said, that's not the right way to actually use it. The right way is to put it at the 50. So where's the 50 in this area? And as you can tell, you are under it for the majority of the part. You are also under your 200 moving average, so you should be looking for sells. But so this is perfect. This is a beautiful sell, and where it comes back, bounces off your moving average and drops down. You get a perfect tweezer top here, so this is something I would be like excited to see. I know some of you would be like, but it didn't cross in the right area, and it actually does. Once again, why this is advanced. If you know how to look at your charts and analyze everything and put it all together into a nice little package, this is the perfect trade to take. So this is why you would do this one. And then you would enter there at the bottom. Stop loss would be right above those wicks. And then, I mean, this is, gosh, 1 hour, a beast of a candle. But yeah, I mean, you could have really marked this up and written it down. It goes pretty far down. I mean, 50 pips, I would have been out of there. But you guys could have done whatever you wanted. You would have used whatever's over to the left to mark up that zone. So, I mean, this would have been my take profit 1 here, right under these guys, which you clearly hit. Then, you know, I would have been looking over here to see what else. Then this would have probably been my take profit 2. Then, I guess a little on there, take profit 3, which you do hit all of those. So, we have here another set, which is a win. You're higher on your stochastic RSI. You actually have the cross, which is perfect. You get that one. Here you do have like 90%. Again, this one would have probably been a loss, not very much there. That's a small amount of 8. That's how long it's been since I've traded these pairs. All right, you got 8. So it's still not 10 though. I mean, maybe you took 5 and got this one. So I guess that's the question there. But if you lost on this one, you have such a small stop loss. My God, like nothing. Okay, you lost like 5 pips stop loss, but then you get this print afterwards, so you would just be waiting to get back in again, and then you got this one, and then you get your profit. So you more than made up for this. If you took this one too soon, you more than made up for it when these print. Here you go. This one here is about 90% tweezer bottom, and you can see that's a win. You have a stochastic cross. Here is a win. You have tweezer tops that print, and you have a cross in your stochastic. This is also another like one where you might want to be a little more cautious, but yeah, you could take this one. You guys love EJ, so I want to show it to you. You have your two candles here. This is not a wick, this is just my terrible drawing. Sorry, you were not stopped out, you went straight down into profit, and you had your stochastic cross. So this was a good one to take. Here again, you have tweezer tops. Tweezer tops there, goes down. Same thing here, tweezer tops again at a new like higher high than it made. Tweezer tops goes down. This, let's see, yeah, we lose here. So this is a perfect setup. You have your 100% wick of each other. You have your buyer, then your seller candle. You are overbought. Everything looks great. I would have taken this trade. You would have just lost. You got stopped out too soon. You know, your reversal comes here, but not a big deal because you just had a decent amount of wins. Gold. Here we go. So gold, same thing. Tweezer bottoms. You're on a 200 moving average. This is huge. Just remember that. If you're ever seeing tweezer tops or bottoms on or off of a 200 moving average, definitely take it if it all like lines up. Tweezer bottoms. You have your cross in the right direction for your stochastic. Goes up. This one's about 90%, so I'll count it. I would have probably taken it. But it is a little riskier because your RSI is here. But do remember, you're in the 50 and you're kind of touching on that 50. If you get tweezer tops there, you could probably take it. So this is one, you know, I probably would have taken and you would have been good. I don't trade gold, guys. So like, I know some of you love it. I don't trade it, but I wanted to show it to you just because I know some of you really do love trading it. This one's a loss. You do get a little bit of a push down. I don't know if this would be enough for you to want to actually exit your trade. This is an hour chart. I don't think I would want to exit here, but as you can see, you have a buyer's candle, seller candle. Wicks are 100%. Your stochastic's where it needs to be, but you just end up getting wicked out up here. If it wasn't for this guy, you would have definitely been good, but you do get wicked out. That's a loss. This one's a win. You have your like 90% of your candles length here. You have the right setup that you need. Everything's perfect. Stochastic works out perfect. Goes straight up for you. This one's a win as well. You have your candles here, tweezer tops, and your stochastic's pretty close to overbought, so you do get a sell scalp. And I think that's all I did with gold. I actually did this markup for somebody. So what happened here is we were selling. We're under the 200 moving average, like a lot, significantly under. You can see it's way up here. Euro USD just fell. So it was falling for quite a while. And then these printed. So I did notice these the one day and I was like, whoa, that's pretty good. And you're way undersold. So I figured it was going to come back. And you know, I just basically put your stop loss here. This candle is a beast of a candle, so just be mindful that even on a 4-hour was some significant stop loss that you would have to keep. Putting your stop loss here and then having it go to up here like 44 pip stop loss is pretty crazy. But I was pretty confident in it because I actually knew this trade happened and it didn't go retrace as far as I needed. So when it pushed even further again, I was like, this is probably the push. Nonetheless, so you get your trade set up, everything looks good, you put your stop loss here, under those wicks, and then you are just going to take it up. So you can see it works. You enter, your entry is here right above that candle that had your tweezer bottoms, and then you just mark your zone. So you can see I had marked my take profit 1. Everything looks nuts right now, but I had take profit 1 here, which it hit no problem. I had take profit 2 here, right above this area, which it hit no problem. Ooh, now I'm moving everything. Take profit 3 I had marked up based on what was over here. So take profit 3 was here, and then take profit 4 I did right above both moving averages, and then I also had it like at this area here for take profit 4. And then you could have left it run. I mean, you can see it went crazy and it shot right up, but you can see the power in a 4-hour markup. Like if you get it right, you can get all of that, which is insane. So you also can do it on smaller, you know, you can get smaller ones too, movements. This is still a pretty nice movement. You can see here you have your tweezer bottoms and you enter super tiny stop loss on that one, which is nice. I mean, and that goes up all the way like 42 or something pips, but like this stop loss is insanely tiny. So that's really nice. Okay, we have a win here. Tweezer tops. As you can see, crossover on your stochastic. Stochastic's pretty high. On the overbought, drops. Winner. I mean, it's pretty basic, and like I said, I will link a video of a guy who does do this as well. He does do it on Indices, but I'm sure if you YouTube it, you will find somebody else who does it for your pair. So you can always look that up as well. If you have any questions or need help with marking up your charts, please feel free to send me messages. But I would really appreciate it if you guys would post all of your markups in the pink room. That's like my room to help you guys. If you have questions or things regarding strategies that I do with you guys, that's where I want you to post them so that way I can help you. So that is it. Like I said, if you have any more questions or you have a specific pair you want me to look at or a time frame, please do post them in the pink room and I will see you guys later. All right, bye.